Hey, everybody, Tom Gentile. Welcome to Power Profit Podcast. We're in the middle of September now.
Oh, man.
Middle of September, we're here. CJ, welcome. Welcome back.
Hey, Tom. Always good to be with you. How you doing today?
I'm good. I'm good. We have streaming at the bottom right there on the ticker
Yep.
is what we're going to be discussing today. Obviously, I want to talk about gold and more of my long term. I know you have some questions from the group.
Yep.
Some frequently asked questions. But the biggest story this week is what happened on Tuesday, September 12th at approximately 1 p.m. And that was the, what did they call it? The Wanderlust?
Wanderlust. Yeah.
Wanderlust. Yeah.
Wanderlust.
So that was basically their big 90-minute conference they had. Remember these used to be live?
Yeah.
They'd have a big conference and Steve Jobs would walk out. And what's funny is what he would walk out, he'd have no entourage. He was, I think, the first guy. He doesn't, all those faceless people that are putting those iPhones together, that are working hard. None of those are out there behind him to offer credit. He came out like he was, he was the Dalai Lama.
He was, you know what? You're down in Florida, Tom. You know the Ringlings, right? The Circus Museum is right down there by you. He was the ringmaster. That guy could command a presence and did a great job performing. And that's what he reminds me of. Is just that ringmaster down there by himself, and he's got the whole circus around him. But Steve Jobs was magical in that sense.
He was, and you know what? He could pull a live event off like nobody else. I think Tim Cook made this, after watching, and not anything with Tim, but after watching, I think Elon Musk trying to throw a bowling ball through the Cybertruck, saying that the glass is impenetrable, and twice it broke. I think that was a big aha moment for let's not do live events. Let's have something that broadcasts at a certain time, but we'll make sure that we have it all scripted, all recorded, where it fits together really nice. I mean, it was a nice presentation. They always are. Looking at that spaceship from Cupertino, it looks like if the end of the world's coming, I think that thing might actually take off, and I think that's what they're going to be using for Mars.
I think you're right,
for recolonization.
Yeah,
I digress. Big things they had. That obviously the biggest one is I have to skip past the watch, and I have to skip past the 15, and you got to go to the Pro, and more importantly, the Pro Max.
Right.
The Pro Max. When you look at everything, I look at it. I love the presentation, and then I step back and I wait, about 24 hours, and I go, all right. Yeah, there's a really cool camera feature on that new 15 Pro Max where they're able to take a telephoto lens and by bouncing light in 4 separate directions, they're able to squeeze a telephoto lens right into the iPhone. I think that is cool. These guys must have aliens working for them, because how do you come up with this kind of stuff? I don't know. That's my half attempted joke at a conspiracy theory. But the other thing too, CJ, and this titanium, with the Pro, they released the titanium, and they've got some sort of glass that, every year they keep saying that the glass is going to be something that is not going to break. And I thought the best attempt they had years ago was when they were going to use Gorilla Glass or something like that. And that just never, I don't know what happened, but it never happened. Maybe this year will be different. I can tell you right now, when my wife and daughter buy iPhones, I encourage them, I force them to buy the protection plan.
Oh, yeah.
Because they drop their phones more than anybody else I know.
Tom, because of the glass, I bought the protection plan on this, because if the glass goes, that's it.
Yeah. I got mine on too. And the problem I have with these is that when I'm walking by a pole or I'm walking by something, inevitably my wrist will never hit it, but the watch will.
Yep, a doorknob. I've struck a doorknob a few times with this.
So what did you think about first of all, did you watch the live event yesterday?
I did.
Or not yesterday, this week. Did you watch it? And then what did you think about it?
I did. So I remember also Steve Jobs, and I remember what Apple was when Steve Jobs, and this isn't me dissing on Apple. It's just the thing, every one of these presentations, I'm waiting for, remember how Steve Jobs would say, and just when one more thing, at the end, I'm waiting for them to do the really big one more thing. I'm waiting for Apple to stop. I always use this phrase, and I once was fortunate enough to sit at a brunch with Steve Forbes, so I'm ripping it off from him. But it was, they need to start innovating again instead of iterating. And what I mean is, iPhone 15, iPhone 16, at some point, and they kind of tried to do it with the X, we're going to see something new at some point from Apple that is going to be truly an innovation. And the new camera is amazing. But unfortunately, I've got, my 14 camera is pretty darn good. I'm not going to roll out to a 15 because of that. I'm really excited, and this is why I always like Apple, and I never short it over a long term, because at some point they're going to iterate. They're going to go from the iPod. Remember the old iPods? I think I still have one somewhere in here. They're going to go from the iPod to the iPhone, and that was huge for Apple. Something's coming up after the iPhone, and at some point, it's going to be huge. Yeah. That said, I do like what we're seeing from them on the products. Obviously, they're starting to get a little more in touch with AI, which is going to be the big thing. I expected no less than 17 mentions of AI.
Yeah. You know what they didn't do? They didn't mention AI as much as, I mean, I barely heard it. What I did hear was machine learning. Yes. I heard that throughout the presentation. So I think what they're trying to do is use different words that kind of mean the same thing.
Right. Well, let's be honest. There are a lot of people out there, myself included, that think, and I believe that as part of this growth in AI, we're going to see a pullback here, right? And do you want to be screaming AI at the time when the market is going to get maybe a little soft on that, or do you want to say machine learning, and then when everything bottoms out again, you say this is really AI, and now you're all of a sudden at the front of the line? Okay. I will say one more thing about the phone, Tom, and this was a disappointment. They're taking my lightning cord away. And just after I get everything over to the lightning cord, they're taking it away and going to the USB-C. So
my wife was pissed about that, but I explained to her that, first of all, they should have always went to USB-C.
Yep.
Lightning was just a way, I think, of them getting some accessory money.
Yep.
But so they're going to USB-C. That's finally an admittance that that's the standard that they need to be on because everybody else is there. Fundamentals.
Yes.
Let's, what do you see about the company that stands out?
This company,
they make $200 million a day or whatever that number is.
That's exactly where I was going. This company, everybody thinks about the products and all this. This is a service company. Remember that? And that's why they make that kind of money. They sell the products as a conduit or a gateway to the services that they have behind the phone, behind the watch, behind all of this stuff. And Apple never fails. They're right up there with Amazon. They never fail to capitalize on that part of the business. And that's why it's like an annuity that is just going to continue to pay off and pay off and pay off. Yeah. Fundamentally, this company is one of the strongest out there. And I'd put them right up there with Amazon and Google. We don't have time to break that down, but Google, who is now under the scope of the government in this trial, this antitrust trial.
Yeah.
Maybe that's next week.
I have to say, coming back to Apple, when my wife and I were watching the presentation, and she's like, "Wow, that iPhone 15 Pro Max, that thing's gonna be $1,200 just to start." And she always goes for the terabyte, which means that's gonna terabyte into the cost quite a bit more.
Right.
But you look at that. And I told her, I said, "Listen, they're probably putting that thing out not much above cost." So I'm with you. It's the service. And you want to know what I think is the best thing, the best announcement as an investor, as a transparent. I own Apple stock. As a holder, I want to hear things where I'm hearing recurring revenue. And the one thing that was said that I don't think anybody picked up on some of you picked up on as an investor, but no one's talking about it, is these new storage plans they started with. Because if you're my family, we take pictures. We do. I have pictures of receipts. I have pictures of my family. We take pictures of everything, and you don't want to lose them. So you start the storage. It's kind of like public storage. I think that there's this shift to digital hoarding, is what I'm calling it, and you gotta have a place to put your digital stuff. And what do they have right now? They have a free, I think it's 1 gigabyte or 10 gigabytes. And if you want 100 or 200, now they're jumping up into terabytes of storage. These guys are going to be the digital public storage of the world. And the money they're making to hold your digital stuff in the cloud, like you said, service industry. And when I looked at that, I'm like, everybody's missing this one. This is going to be a long-term plus for Apple, regardless of what they do with the hardware. It's the service industry, Apple TV, the subscription plans. They realize subscriptions work. The one thing I can't seem to find on the site, and maybe I'm just not searching for it, is the glasses.
Oh, how do you feel about the glasses, Tom?
I think they're going to get to that point. Google tried to do it with Google Glass, and truth be told, I had Google Glass back in the day. I was one of those Google Glass people, and man, that thing, it was cool for about 5 minutes, and it sucked.
Do you still have them?
Yeah, I think I have them somewhere. There'll be a collector's item one day. I still have the boxes. I have all that stuff. I have everything on it.
Maybe we can compel you to wear them next week for the podcast.
I got to go find them in the attic somewhere. But I don't even
think that is like so many other things out there that are either, if you look at what Meta's trying to do, and we've kind of fallen back on the metaverse and all of that. And I think that's just idle right now. It's in that period where it was too early. It looked like a 16-bit video game, and everybody went, I'm not going to hang out in that area. Why do I want to buy land or property in the metaverse? Those glasses, though, at some point, when we actually do get to that point where we're in virtual reality world, it's going to pay off for Apple. It'll pay off big. And I think it's one of those things that they'll be quiet, kind of like the AI, about until it pops up again, and then they'll own it. They'll own it. That's what Apple does.
I mean, when I go and try to search for augmented reality on Apple's site, I can't find the goggles anywhere. Maybe that's what I'm typing in. Goggles.
Glasses Vision Pro. Here we go. Apple Vision Pro.
Vision Pro. There it is. And the reason I'm even bringing it up is that this isn't something that they're putting on. If you go to the Apple Store, you have to do what we just did to find these things. They don't just pop up on the front page. And in fact, I mean, they're everywhere I look. I mean, the only thing you can do is notify me. Is basically the closest you can get to buying these things right now. Okay, they're too expensive.
Hold on. Because it's a genius. What you just pointed out, though, is really genius, because Apple does this very well. They always go to their, call them their influencers. Apple has their own ecosphere of the people who are absolutely nuts about their product. And, they've got that Apple glasses right now, the Vision Pro, and they're working out everything on that. And when they do release it, it's going to be huge.
And I do think they're going to have to do the same thing. They're going to have to undercut this. It's going to have to be below cost, and they're going to have to make the money back up on the service side. All right, we've talked about Apple for so long now. Let's get into quickly. As great as this all sounds, folks, the worst time to be buying Apple is right at the announcement. I mean, because and I've got data. I've got data that talks about Apple in September. Now, they typically launch these. They do this launch in the first 2 weeks of September. So I ran some data that goes back 10 years. The last 10 lead-ins into their presentation, the stocks actually dropped. It's dropped at and through that presentation for the most part 20 days into September. Okay, so if that's the case, if you're looking to be, to add to a position or buy Apple or look at buying call options on Apple or call spreads or any kind of bullish opportunity. And again, that's why it says American's pattern trader below my name there, because this is actually what I do. And so I set this to the middle to September 15th. And I go, all right, show me what happens after September 15th. And it flips after this week. And in fact, it's really not really after this week. You go out to the last week of September, and that's when things start to turn around for Apple 90% of the time. We're talking about end of September is when you actually start looking at picking up Apple off of these September announcements that they do. Yep. So it's kind of like stay away from Apple, for at least a week after the announcement. Then you start going in, you start picking this up. I want to also, I don't do this for the podcast that much, but I'm going to do it today. And so I am going to put up a chart of Apple, and I'm going to put up, folks, the last 30 days. So you can see what CJ and I are looking at. But what do you think about the chart of Apple right now? I mean, it's kind of dipped down. It looks like 170, really 174 seems to be that closing low that's happened when you go back to the beginning of August.
Yeah, you know what? The thing I'm looking at here, Tom, and we talked last week about how the third week of September is very volatile, and your money calendar really nails it with all that red and orange. I am looking right now at the chart of Apple, and if you look at that 50-day moving average, which is that line that I use to signify whether the trend is your friend or not, it just started trending down a little bit. So it's telling us that Apple's kind of, reversing that trend that we've seen all year of the stock just marching higher. When I look back, September, and I'm trying to give an exact date here, September 29th of 2022, it did this exact same thing, and it was acting a little squirrely. The shares were, and bouncing across 150, kind of like it is at 175 right now. Eventually, it dropped down to a 125, 130 or so, and that was a great time to start buying the stock. So it kind of ties up or meshes up with what you're seeing with the your money calendar right now on Apple, or the trend. A little bit of a break here, and we all expect some volatility in September and October, but let's go back to that beginning message. Do you short Apple for longer than a couple of weeks? No way, man. Right?
I agree. I mean, you look at that 174 is a really nice, nice bounce area there for Apple. And so, so that's, and then what do you do? Do you buy stock? Do you buy calls? Do you sell puts? I mean, yes, and yes, maybe all of the above. What I'll do is what we'll do next week is we'll talk about something that you can do long term that sets up. What if Apple doesn't go to 174? Do I miss the opportunity? We'll talk about that. We'll do a little bit of strategy session in next week's podcast, because we still have a couple of things we want to get through today. But I do like Apple at 174.
Yep.
And I know you do too, Chris. All right. So let's talk about gold. And so let's spend a few minutes talking about gold. So, everywhere I look, this is just one of the gold is just one of those things. And I'm looking at and I'm going to put a chart of gold up on the, for everybody to see as well. However, it's not going to be a 30-day chart, CJ. I want to look at with gold. I want to be looking at 1,000 days, 1,000 days of gold, which takes us back to 2019. And so I'm going to put a really long-term chart of gold up, because I want everybody to focus on the long term and not what's happening in just the last couple months. Because the last couple months, you see, we went from 194 down to the 170s where we are right now. But I want you to get a look at the bigger picture. And the bigger picture of gold looks bright. It looks, you're really looking at something that's still in a bullish camp that looks like it's just pent up and ready to move. What say you?
You know what? Same thing, Tom. This is a really interesting, and obviously that ties in with what's going on with the Fed and inflation and all of that. You think of all of that when you start looking at gold. I'm looking at the GLD shares, those SPDR gold shares that you use as, a telltale here. And man, it is trying as they bounce around this 177 level, they're trying to get back up above that 200-day moving average. Remember, I just said with Apple's starting to turn over on that 50-day. It's the reverse with gold. The 50-day is starting to bottom out and starting to turn up. And when you look at the 20-day and the 10-day and all of these things that we watch to tell where the trend is going, they're now starting to show that gold is really trying to reverse higher. I like this in terms of an intermediate to longer term bottom for gold. I really do think this is going to pan out. And that was a pun on words, pan out for the long term here.
Yeah. Have you looked at the 50 and 200 day? They're literally touching each other right now.
Yeah, they are.
Really good area that a really good potential area for a bounce.
Yeah, and you've got the 20-day that's also right there as well. So the shorter term traders are also going to want to get in on this as well as the long term. I love it when both the short and the long term investors can look at the technicals and say, hey, there's a short-term reason to buy it, and there's a long-term. You get both parties involved here, and you could see gold really start to fly again.
Yeah, and full transparency, just like Apple, I am long a good bit of GLD.
Yeah, same here, Tom.
And
same
so, here. Am I, I guess when you look at this going back to 2020, when gold ran up to a closing high of 193, GLD, ran up to near 194. And then it touched it again in 2022. And then it came very close just a few months ago. I mean, those triple tops to me are setting up for, there's a couple ways you could look at this. If you're a long-term investor, then you're doing what you feel is right by adding to positions, maybe time-based. But if you're a trader and you're looking at when's the best opportunity to get into this, why in the world would you want to buy it as it goes down when you could take the old Jesse Livermore approach and say, you know what, we get to 195, I want in, because 195 is significantly above this triple top. And all of a sudden now it's it becomes the front narrative instead of being on the back burner. Everybody's talking about it. And I think we push above 200 with a close at 195.
Yeah.
Now, the great thing about that too, CJ, is you're not bullish until it gets bullish.
Right. Well, and that's, that goes back to the old psychology of trading or the sentiment. We always everybody worries about buying at an exact bottom, but really when something like gold breaks out, you've seen this and I've heard you talk about it, Tom, when gold breaks out or when Nvidia breaks out or XYZ breaks out and it gets up on those headlines, that's when the crowd starts chasing it. And that's when you can be in right before that happens or as it's happening. It's always good to have the crowd pushing behind you. And I believe you're right that once we hit 195, and you see those headlines, the money will flow. Interesting point here, Tom. Gold from a long-term perspective, looking at the 20-month moving average.
Yeah.
Still in a strong bull market trend here. Very strong. And you'd have to go down below 170 to break that trend. I don't see that happening. How about you?
And no, and as I showed the chart earlier, the Fibonacci is still strong. It dates all the way back to around 2020.
Yeah,
you had 2020 lows and 2020 highs, and we've had pullbacks that have, for the most part, stuck the Fibonacci retracement levels. Mm-hmm. And in each of those times, we ran back up to that top. So I think that triple top's big. We're kind of getting close to about a 30% retracement off that top, but still well inside the bullish camp. If you were to take Fibonacci and kind of divide it into three areas, we're still in the green area. We're still in the very bullish area of gold when you look at it on a 5-year, a 5-year chart, which we just did.
Yeah.
So CJ, a couple minutes left. Let's jump into some questions. You had a couple questions that came from our students.
Yeah. You know what? I feel like I should have cards like David Letterman or something when I ask these to you. But I've got a legal sheet. Ready?
So I'm going to answer these too.
What's that?
You're going to answer these too.
Yeah, I'll answer them as well, but I'm really interested in your input. One of them I'm going to save until next week because you just hit it, and that is what's the best way to buy a stock? You mentioned that with Apple. Let's bump that out to next week.
That's a whole podcast
Yeah,
itself. But what we'll do is we'll look at Apple and we'll look at gold once again next week, and we'll look at those and talk about limit orders, and we'll also talk about how to get paid to create a limit order, and we'll also talk about stop orders. How do you set an alarm to buy GLD if it does go to 195?
yep.
How do you set the alarm for that? So I think we do a good bit of our podcast or a podcast. We'll make it next week on different types of orders.
I like that idea. That's good. All right. First one's going to be very basic. This is getting down to the person that may be just listening to us for the first time, Tom. How do you get started as an investor? So I guess let's, maybe a couple of points on what would be the first things, or what were the first things you do when you started becoming an investor?
Well, let's talk about what you don't want to do first. All right. Don't get too attached to the TV. Don't get too attached to one particular stock. All right. And don't get attached to one particular strategy. For what you do want, and what I'm telling everyone, CJ, is exactly what I did that put me underwater back in 1987, because I listened to one guy and I took one asset and I leveraged it to the hilt, and I margined up and I ended up margining out. And I spent the majority of 1988 on the sidelines because, frankly, I had to pay back the broker what I owed them from a margin call.
we talked about the margin call a couple weeks ago.
And done that. So, so I mean, so getting to, in all seriousness, you want to. I like to be a jack of all trades. I tell people, become a jack of all trades and become a specialist in 2 or 3. Now, what does that mean? That means learn everything you can about, understanding the world of investments. I don't have books on investments. I don't write, I don't do a lot of the long term. I mean, I read a lot on investing strategies. I think one of my favorite reads was Benjamin Graham. Benjamin Graham he wanted it cheap. He was a value investor. Warren Buffett, anything you can get your hands on with Warren Buffett, very good reads in terms of how he approaches investing. As a trader, I have a little bit more knowledge in that area in terms of what I can offer. But as an investor, I mean, think about the books that are out there. What are the books that you like as an investor, CJ?
Boy, you know what? I'm looking over at my bookshelf. Obviously, as an investor, I've got to go back to Peter Lynch and The Random Walk Down Wall Street. And just the basics. And it kind of goes, Tom, to my approach. If I'm an investor, and I tell this to my mom and my dad and anybody who asks me, my neighbor comes over and says, how do I pick a stock, or how do I become an investor? You know what? Buy what you know. I call it a walk down Main Street. I don't call it a random walk. I call it a walk down Main Street. And when you walk down Main Street, I remember I was down around you. I was in Naples with my kids on a vacation, probably 15 years ago. And we're walking through the mall, and my sons went nuts when they saw a Pacific Sun store, PacSun. And I asked them why, what's going on? And you notice that the store is packed and vibrant, and it's just kind of like what we were talking about with Apple. If you see everybody using that and there's a buzz about it, learn a little more and know what you buy.
For me, growing up as a teenager and a 20-something, merry-go-round was the place everybody got the stuff from.
I had a leather jacket from the merry-go-round, man.
I think I got my members only jacket from there. And now I'm the only member.
Yeah.
But anyway,
the Chess King, right? The Chess King was the other.
Yeah. Yep.
Wow, we just dated ourselves.
Obviously, things change, and you got to constantly, if you're going to browse the mall, browsing the mall today, where's all the traffic? The foot traffic is in 2 areas. It's at the Apple Store, if you have one at your mall. Lululemon is another place where it's amazing that, what they sell in there. I think the prices are above average, but people like the quality.
They love it.
They like that. So, yeah, so I agree with that. Buy what you know, but learn as much as you can about how businesses make money, because you'll get those years like we had in 2020 where just everything seems to go up and the stay-at-home stuff goes up. But at the end of the day, it's not about how many subscribers that your company has that put themselves in the hock to get them. It's about companies that actually make money year over
Right.
year.
Yeah.
So that's my thought. Now, as an option trader, if you want to be on the investing side, then you need to understand what a leap option is.
Yes.
What a long-term equity anticipation option is, because that's the closest thing to investing that you can get with the long-term with options themselves.
Yep. And so many benefits with the leaps. I love leaps, Tom.
Yeah.
You can diversify a port. We should do an episode on that. We could diversify a portfolio with less money, etc. They are the Swiss Army knife of options, I believe. They can really, really be used effectively. I want to throw something in on the trading side. You asked me about investing. As a trader, one of those books that I really love, and I'm looking at it right now, I should have grabbed it. Mean Markets and Lizard Brains.
Yeah.
It is a great book, and it gets into the psychology of trading. And when you read something like that, and it was done by some guys at MIT, these studies, you understand that your trader's mind makes a buy or sell decision in the first quarter of a second. And then the rest of the 30 seconds or 3 minutes or whatever time you spend before you push the buy button or the sell button is just the front of your brain rationalizing your decision. You've already made the decision. You already know what you're going to do.
And let me mention this too, because you brought up a good point. These books, you guys, you can get these on audio now, and you can get them on YouTube. You don't have to pay for them. And so, what I do every night when my head hits the pillow, I take an Apple iPod and I shove it in the ear that's facing the ceiling.
Yep.
And I will put on an audiobook, and I fall asleep listening to these audiobooks, and they run in my head all night. And I think there's something about the subconscious that picks up on some of this stuff.
Ooh.
And so I do this all the time because, if I don't have time to read during the day, which sometimes I don't, I'll shove that thing in and I'll try to, I know it sounds crazy.
No, it doesn't. It sounds genius.
I mean, I do it. And then, you get the iPod with the noise canceling so that, you're fading out everything else.
Right.
Now, there might be some negatives across that, which means if somebody's screaming for you in the middle of the night or you need to be awake, maybe you might not want to put the noise canceling on so you can hear that above everything else. But I'll put that volume down as low as I can where I can hear it, and it won't keep me up all night. But it's amazing, how many times I've listened to Reminiscences of a Stock Operator, which is a 9-hour audiobook.
Yeah.
And I'll get through part of it, and so I just, I can almost quote that book now in passages. And it's because that's what I do. So,
Tom,
I'm trying to put up all that time on one question. Do you have anything else you want to put out that
I'm going to ask an easy one here in a second. But we can dive into it. I'm going to throw in there though. When I go to bed, I listen to Matthew McConaughey read his book, Green Lights.
All right.
Man, that guy can put you to sleep with his voice. It's a great soothing voice. All right. Let's ask this one. And we could be this. I think this one would be easy to ask. I'm going to ask it in the words that I think it should be asked, not as it's written here. It's written as, how do you manage multiple strategies? And I think what we're trying to get into with this type of a question is, let me ask it this way. Do you have a different account, and you're an investor and a trader? Do you have a different account for your stock holdings, for your option holdings, or your crypto holdings? Or do you just mash all of them in one spot?
I actually have multiple accounts. I have one for crypto. I have one for long stock and long, like stock and longer option term trades. And then I have one for just specific strategies like put sells.
Okay.
Because I try to gauge them. And what's interesting is I look at this stuff. I look at this stuff more than I probably should. But when we have a massive rally up on in the overall market one day, we have a massive rally down in the overall market one day, I like to look and see, very quickly what strategies are performing better than others.
I
You
do
know,
the same thing.
So you know, to kind of give you an idea. So I'm looking at the markets for today, and they're all up about, on average, they're up about 1/3%. However, I'm flat in my long-term area. In my crypto, I'm up. And in my shorter-term stuff, I'm also flat. So even though the market's up, I'm flat today in both the long-term and short-term. And that doesn't always happen. But yeah, I like to try to gauge who's winning, who's losing, you know, and I use the benchmarks. You know, am I headed? You know, kind of. I feel like I'm in a cross-country race, and the spider is the one you want. You know, that you're pacing. That's the pace car, and you ahead of the pace car, or you behind the pace car. And so, yeah, but I don't get too crazy with it. I mean, you know, there are dozens of option strategies out there. I don't have dozens of accounts where I do one in each option strategy. Now, that being said, you know, that's where spreadsheets come into play, where you can actually go through and look at different type of strategies and how they performed throughout the week, month, the year, et cetera. But that's how I do it.
That's similar to me. I've got an account for ETFs, and that's all I trade in that account. I've got an account for stocks, then I've got an account for options, and I've got a crypto account. So yeah, we're kind of on the same page here. And I do the same thing, Tom. I look at them every single day and say, hey, I've got a spreadsheet that I put the balances in every day. That's how. Yeah. I need to stop doing that sometime. Maybe that's another discussion for another podcast.
Yep. And speaking of that, that ends this podcast for September 15th. We are right down the middle of September, guys. We'll be back again next week. And what we'll do is we'll take a little bit of what we did this week and we'll add to it. And I really want to focus on Apple because by the time we get into next week, Apple might actually end up being something I want to add a position to for myself. So
we'll come back to that question. What's the best way to buy a stock? So everybody tune in for that next week, Tom, right?
Awesome. All right, CJ, thank you very much. Have a great rest of your day. Folks, enjoy the rest of the week and the weekend, and we'll see you again next week. Bye, everyone.